Africa is no longer the dark continent that the global community once thought it was. There are endless opportunities out there for us to take on. And while there are a number of challenges on our continent, the future of Africa is very bright. One as it forges ahead in becoming a global economic contender. Joining me tonight to talk about the future of our continent is Edward Stokes, who's Managing Director of IntrepidHR, and Luendran Pillay, he's Managing Director of Afrinet. Welcome to the show, gentlemen.
Thank you.
Thank you for joining us. Now I'm going to start with you, Mr. Pillay. What is your profession?
I'm with Alexander Forbes, and Alexander Forbes is the continent's largest pension fund administrator. So you could call us a financial services business.
Yeah.
Our core business is pension fund administration. We're also in insurance, short-term and life.
Is the future of Africa bright?
Absolutely. It's a very open-ended question, but to zero in on a couple of things. One, we're seeing Africa bucks, or parts of Africa buck the economic trends that we see in the West and in certain parts of the East. That means they're growing faster. They are deepening their economies. Skills development is also improving. So what we are seeing is Africa no longer being, just famine and foul, but economic growth. Certainly over the last 5 years, we've seen the commodity exporters win big. Now we're seeing East Africa win big. So as Africa becomes a commodity importer, as opposed to a commodity exporter, they're winning in the cycle.
Now, Alex Forbes is known to be a global company. A lot of business people, a lot of entrepreneurs, they say it's difficult to do business in Africa because you have to deal with different governments and there's a lot of red tape. How true is that?
Well, there are pockets of that. And the same could be said of South Africa. And the same could be said of America. You try getting a mining license in the United States of America. I mean, the red tape would be very similar to some parts of Africa. So we have to be clear about what you want, firstly, and your business model, and also the value add to the local economy. Once you have all of those things lined up, it's very easy to access the right channels. The reality is, if you're going in there to add value and create employment, you'll find the road a lot easier. To the extent you're going in there on some sort of value extraction, it's going to be very difficult.
Mr. Stokes, what does IntrepidHR do?
We're a search firm with a 10-year track record of working across Africa. We were originally part of a multinational business. We bought ourselves out, myself and my partners, and we bravely took on the challenge of figuring out Africa, where the growth areas are, where the best practices are. So the first couple of years, we found it quite tough. As a international business practices, you try and apply that into the continent. We came across a lot of innovation on the ground, so we've had to tailor our approach to the market, but also still draw on international best practices to create some guidance.
And over the past couple of years, you've obviously had some growth. How many African countries do you guys enjoy presence?
Well, look, we're not actually in any. We operate solely out of Johannesburg and travel, right? The kind of clients that we service tend to be very specialist around growth companies off the private equity and fund management growth agenda.
Yeah.
So these are mid-size, some of them larger companies, where investors put capital into these businesses, and then we find leadership in those portfolio companies to drive these businesses through to their expected outcomes. So Nigeria, Ghana, Tanzania, Kenya, Uganda, Mozambique, Botswana. It's probably easier to name the countries we haven't helped our clients in. But there's definitely more of a concentration in recent times up on the East Coast, whereas maybe 3-4 years ago it was up on the West Coast.
Yeah.
But it changes according to the cycle.
You guys are a financial services company, Alex Forbes. I mean, how do you think entrepreneurship can play a role in advancing our continent forward?
Well, firstly, entrepreneurship is playing a role in advancing the continent. What you'll find across the continent is that the mixture of small and medium enterprises relative to big corporates is a lot higher. Whereas in developed markets, you find small and medium enterprises between 10 to 30% of the economy. Outside of South Africa, I would say, based on some of the data we've seen, that the small and medium enterprise space is actually larger than the big corporate space. Some of the anecdotes we can talk to, tax collections are larger from that space than from the large corporate. Employment is larger, maybe seasonal. So those two key indicators actually point to the direction Africa is growing in. Now, if you look at the statistics over the last 5 years, you'll find that the economies that produce consistent growth are those that have larger components of small and medium enterprises in their overall mix.
And what are some of the infrastructural, I'd call them problems if you would, that you guys experience as a financial services company? Because a lot of the African markets or African countries, they are, they conduct business in cash.
Yes and no. The biggest infrastructural constraint we find in these markets are skills. With technology, you could import an individual electronically into a country.
Yeah.
There's no constraint anymore. There's no work permit in having a video conference or, having electronic monitoring.
Yeah.
So the biggest constraint is in-country skills. The biggest opportunity, though, is in-country skills. Because once you have local skills, developing local skills, your ability to leverage that up and grow your business is exponential. Now, we as Alexander Forbes have favored the organic growth approach, where we've actually gone in and started from zero in these markets. And that has been an eye-opener for us. We've seen the rate at which this osmosis happens, and it's a lot faster than one would think. Typically in a corporate, you would require at least 2 to 3 years to upskill individuals. We were pleasantly surprised with the quality of the education system, particularly in East Africa. So I would definitely put my reputation online and say East Africa, definitely a better education system than Southern Africa.
Yeah, and a lot of people are saying so. Yeah. I mean, your take, Mr. Stokes, it's a discussion. You can only.
And I think that it's quite a more measured business model, more interaction between the economies. I think it just seems to be easier trade flow and easier for a Kenyan company to move into Tanzania than perhaps a Nigerian company to move into Sierra Leone. And the education plays a very big part towards building your leadership. And the rate of growth of these economies has outstripped the production of local leadership. So the role that we play is we work with Harvard, Wharton, Columbia, and London Business School mostly. We go and find the Africans who go do the MBAs within those institutions. They then go and spend 3 to 5 years working for, it could be Goldman Sachs, could be AIG, it could be Bain Consulting, picking up some international skills. And then we bring them back into impact roles right across Africa.
One thing that I've realized over the past couple of years, and I don't know what the numbers are, is that a lot of our African brothers and sisters who get to go study overseas do not come back to the continent to come and plow back with the skills. And how do you attract them to come and plow back those skills and build the continent instead of enjoying the dollars and the pounds overseas?
Look, I mean, I think individuals' agendas vary, right? There's a very small percentage that come back straight from business school.
Yeah.
But that's mostly because, at that stage you've got $150,000, $200,000 loan to do that MBA at Harvard or Wharton or London Business School. Now, with the kind of localized salaries you're going to earn when you come back, it's going to be impossible to pay that back. So most are forced to spend a couple of years in the international market, earn the dollars, get the dollar bonuses, pay off the loan, so that when they do come here, they are free to really look at an opportunity for its own merit and not the dollar to pay the loan off. Because businesses here won't be able to afford a $175,000 employee who's 26 years old.
And a lot of entrepreneurs that make up Africa are ordinary small entrepreneurs. I like the fact that earlier on you were talking about micro, medium businesses or medium-sized businesses. We're getting more entrepreneurs from ordinary, down on the ground entrepreneurs or Africans as opposed to MBAs. Because I look at a lot of MBAs as joining already established multinationals instead of starting their own businesses that can take the continent forward.
Well, it's the old equation, How much of book smarts do you need? How much of street smarts do you need? And certainly what I've been impressed with is the ability of the street smarts individuals to cross over. It's not uncommon for you to find an individual outside of South Africa who doesn't have a statistical or an actuarial background, but to be reasonably well versed in insurance, and have a distribution base that counts in the hundreds of thousands. Okay, so you have to be comfortable with that level of what I would call skill ambiguity to the extent you want to succeed in these markets. If you want to apply a Harvard or Wharton model, or even a traditional big corporate model to succeed, where you're looking for an actuary with 10 years experience, he must have written so many papers and have had a track record in the risk and compliance department of a big corporate, forget it.
What gave you guys the confidence to think you can go at it on your own? Because a lot of people, it's fear. I mean, including even professionals like yourself who are amazing, highly educated. For them to jump and just go out on that leap of faith to go at it on their own, it's not a lot of people that do so.
Well, I think it's an opportunity-driven thing for most entrepreneurs that I've met. You get some guys who are serious entrepreneurs who won't even go to business school. The guy who founded Facebook left business school to go found it, and he's a real entrepreneur because he didn't wait to finish his Harvard MBA and then launch Facebook. He knew he had to do it then. But that is a very small pocket of people who are the real entrepreneurs. I find entrepreneurialism in an Africa context is almost a sort of a business bravery to accept change by the real business leaders who drive the big market share. It's a different type of entrepreneurialism. It's more the open-mindedness to accept change, to press innovation. So entrepreneurialism has different levels of application in Africa. And the skills, the commercial spirit, the regulated environment, the impression we create on the rest of the world with the businesses we build to make them saleable. I mean, these are all factors that build into entrepreneurialism at different levels.
Now we have some of the most groundbreaking conversations on the show. Tonight we're talking about the future of Africa. Still with me, joining me on the conversation is Edward Stokes, Managing Director of IntrepidHR, and Luendran Pillay, Managing Director at Afrinet, which is it a subsidiary of Alexander Forbes?
Correct.
And what does it focus on really? What type of insurance?
We focus on short-term and life,
Okay.
so motor vehicle insurance and life insurance. And we are in that space through a number of vehicles. We're a direct insurer and we're also a broker. So it all depends on the market we are operating in as to what model we'd use.
Yeah.
So a model in Kenya would be very different from a model in Namibia or Nigeria.
Yeah. And how have you guys found Kenya as a country? Because a lot of people say it's advancing faster than a lot of African countries as far as technology is concerned. And what can our country, obviously, when I say our country, I mean South Africa, learn from Kenya?
That's, I think they've had to advance because they didn't have the financial infrastructure to move money. So when cell phones were introduced in the country, that was one of the first ways in order to get money transfers done between the north, south, and the east and west. Okay, so that's been very positive for the economy, and that's facilitated trade. From a technological perspective, the government has seen what the impact of that cell phone penetration has done to financial services, and they're trying to make that happen in education. Okay, so it's that crossover effect between technology and the various other spaces.
Digitization and talking across all different factors of your lifestyle, education, banking, entertainment. They did way ahead from an infrastructure point of view and what they've achieved. All the fintech, South Africa started it, Kenya have overtaken us. The big corporates here, maybe because they're bigger and more difficult to scale, are now trying to move to catch up. And interestingly, when you run a global search for fintech skills, you'll be surprised with the quality you find in East Africa.
For a lot of global companies or multinationals, corporates, you find that you've got a lot of them who are forced to dilute and have some black participation in terms of ownership, and then you've got a lot of them who are taking the money outside of the continent, to overseas. How do you think they're doing enough, or is there more that can be done to advance the continent in applying the money back into the communities on the ground?
I think the biggest reality is the only way you're ever going to create proper employment is to have businesses thrive, right? So sometimes we'll see businesses take money offshore to invest to bring technology back in to then roll out. And that's understandable because constantly we need to involve the international community and the capital that they bring in order for us to create the infrastructure that uplifts all the different industries to trade. There's not enough capital in Africa to do it ourselves. We need international participation. So you'll find local businesses going offshore, creating listings, generating income. I think SARS is pretty good at making sure that the tax comes back. So I think we need to accept that we're very interactive in the global market, and that companies will move, and employees will move. I mean, a brilliant MBA will come from Harvard, spend 3 years in South Africa, then go work for a US company in their Africa penetration team for a new market. But constantly the cycling of the skills is feeding the same upliftment. And business cases of what happens in America, or even in Vietnam and other emerging markets, don't apply here. But if we're not complete or not wholeheartedly, but if we don't interact with the international market all the time and keep our own innovation going, just understanding what to do, pick out the innovations that work for us. I've seen situations where businesses have rolled out a technology platform, hundreds of millions of dollars, only to get to the point where they need to try and operate it and find out they don't have the operational skills to populate making the most of that system. Now that was a 10-year ago business model applied to an African business growth context that was misaligned. These days you pick which modules you'll bring in, you'll test, you'll run certain product lines, you have certain spin-off businesses, more tech savvy than others, feeding into it. That whole solution-based approach to building businesses is very unique to Africa.
Solution-based approach. I like that. Is Alex Forbes entrepreneurial in their approach?
In certain areas, yes. In certain areas, we're pretty fastidious about what we're looking for. So a simple example would be, in South Africa and Namibia, we're a life insurer. In Kenya, we're a broker.
Life insurance is big in South Africa, eh?
Correct.
Yeah.
In Kenya, we're a broker.
A broker. Why?
Because we did an assessment of the market and we realized that the returns are in the broking business in Kenya as opposed to the insurance business. So if you correlate, returns of life insurers in Kenya, they're very, very low, whereas those in South Africa and Namibia are pretty high. Okay, so you have, it's horses for courses. What we are fastidious on, our risk, compliance and governance, will apply across all of the markets, and we will generally apply the more conservative of the local requirement and or the South African Financial Services Board requirement. Okay. In addition to that, we are open to local technology, but our standard systems and our integrated nature of working requires that we have a common platform. Okay. And that gives us the ability to scale, that gives us the ability to create additionality equivalent to local flavor. Yeah. But you can't go into another country and not export what you're really good at. That's the first part of the recipe. If you're not good at anything in South Africa, I don't think you're going to go and win in Kenya or Nigeria. You're probably going to get a bigger hiding out in both of those markets. So be careful, make sure you have a competitive edge in your home market that you can export on a viable basis to these frontier markets.
Which I'll agree with him on, but also it's not always the case. If you look at an entrepreneur like myself who's still very small, who's in the beverages space, where I'm selling energy drinks and water, I'm finding it a little bit easier, actually more easier outside of South Africa than it is in my own country. South Africa, it's been difficult for me to penetrate and get into the market with my energy, the only or 100% black-owned energy drink brand, with our water brand as a beverages company that is growing. It's been more difficult in me penetrating the market here than outside of my country. It's a little bit easier. I'm getting a lot of support.
Well, Spoo, what you have here is you have a corporate crowding out effect, right? You have big corporates who dominate this market in your space. Right? You have massive trade and marketing budgets that you're competing against with your brand. Whereas when you move into a Botswana, now Botswana is a country of 2 million people, South Africa is a country of 52 million people. So you're competing with probably a 2 or 250 million rand spend here.
I'm competing with Coca-Cola and Red Bull.
Sure. Absolutely, right? Whereas if you go into Maun in Botswana, you'll find maybe not a bigger presence of ABI or Coca-Cola. So it's easier to move your product in there.
Sure.
Very interesting.
As long as you've got distribution channels. I see that in the private equity market, where a lot of the early investments were into consumer markets. Investment firms will find a mid-sized business with a good management team, with a decent product, survey the landscape, see the pockets where the other distributors aren't getting into, put in some capital, bump up factory production, aim the product, sell it. Simple. Because there's gaps of need everywhere in Africa. We're so saturated here, so difficult to launch anything new and innovative, you know, because the margins are so small. So some of these firms win massively. Also, some of them lose massively. You misread a market. You don't understand the distribution channel. You think you're going to sell it via shops, but really the model is that you're going to sell it off the back of a truck. You know, you get there, you make all this product, no one in the shops is buying it. Why? You know, then it's too late. So I think figuring out the markets you go into before you go into them, really understanding them is really critical, because you can also lose big.
I'll give you a simple example.
Yeah.
3 years ago in Alexander Forbes, we decided to extend our business from corporate into retail. And at that point in the evolution of Afrinet, which is this division, we could only afford R1 million. So we put 300,000 Rand in each country to create little retail businesses. What that taught us to do was to pilot. Don't go in and bet the farm. Start very, very small. Understand how you can leverage off your existing relationships and your existing book, okay, and build that incrementally. Now, you know, 3 years later, we're sitting with a business that's about 150 million in turnover.
Wow.
But that could have been 150 million Rand loss.
Yeah.
To the extent we said, hey, let's go and put 100 million and build a big retail business. Okay, so start small, leverage up, be sequential, and be niched.
Very interesting. And
as you start getting offers from the competitors on the ground to buy, you don't. Because you know then you know onto something.
I mean, one has already started getting offers, which is beautiful for a small business like ours. In wrapping up our conversation about Africa, I know we've got only 2 minutes to wrap up, and where you taking IntrepidHR as a company, and wrapping up our Africa opportunities and where our continent is going.
Okay, look, I tell you, so for the first 10 years, we've been very focused on Harvard, Wharton, etc., right? And we'll continue to do that. We're starting to see some real innovation on the ground, where we're starting to create some very localized support. And the reason for that is that not everybody can afford a Harvard MBA, right?
Yeah.
But I think everybody deserves an opportunity to have the skill set, so that if the opportunity is presented to themselves in business, they can harvest it. So those broad skills you look for in your MBA are essential. You can carry on being an entrepreneur, but one day when the big trade sale comes and somebody wants to buy that business of yours, which is Pan-Africa, then you're going to value those skills when you sit across the table from those bankers. So our mission is to keep working across Africa and find those pockets where real talent is not getting the gap and bring them into the corporate world.
Mr. Pillay, in closing up and giving advice to small entrepreneurs like myself out there who are watching?
Don't undervalue street smarts. Don't overvalue book smarts. Understand what works, replicate it, scale it, be very, very calculated in taking risk, and make sure that you move from clever to cash very, very quickly.
It has been a conversation about moving our continent forward and obviously using entrepreneurship, seeing that our show is about youth entrepreneurship and about inspiring you and I to keep growing those businesses out there. Guys, let's not wait for anybody. Let's keep kicking those doors, and thank you so much for joining us tonight. Once again, many thanks to my guest, Mr. Edward Stokes, Managing Director of IntrepidHR, and Luendran Pillay, the Managing Director at Afrinet.